In this video, I will be discussing a proven, back-tested day trading strategy that has 91% winning rate. And also, this strategy will be used in 5 minutes time frame. Stay tuned. Back in 2014, when I first came to Australia as a professional civil engineer, I started working in a construction industry. The job was toxic. The environment was highly toxic and stressful. I was desperately searching for a way out of this job. I started forex trading all day long. I worked in construction industry, tired all night long. I was sitting in front of the chart to find out a way to generate extra income so that I can quit my full-time job. A long time have been passed. I have established in this business and well ahead in the game, but I still feel the need to help others who are in the same journey, struggling to generate extra income from this trading industry. So with the intention to help you to become a full-time day trader even with a smaller account, in this video I will discuss a rule-based day trading strategy that has 91% winning rate. The only thing to be successful in this strategy, you need to make sure you fully discipline yourself and also apply proper risk management. Now, if you don't know what is a risk management, I have a completely dedicated video on how to do the proper risk management. I will link above and also I'll put a link in the description. Now, before I going into this full strategy, let me introduce myself who are new to the channel. My name is Nizam. I'm a full-time trader, author, as well as founder of Forex Trading Wizard Academy. I am Forex Wizard. The wizardry you will find in this channel, including live trading session, strategies like this one, as well as educational content that will change the way you trade completely. So make sure you smash the like button and also don't forget to subscribe. Press that bell notification so that you don't miss out any of the wizardry that I post every single day. And also follow me on Instagram, forex.wizard2021. With that being said, let's straight jump onto it. Okay guys, so this is a very simple strategy. I want you to pay full attention to it, remove all the distraction, stay till the end, watch every bit of information. If you have any question, straight drop a comment below. I will get back to you straight away. And also don't skip any part. So first of all, I will discuss the theory behind the strategy and I will go through with quite a few examples and I will show you my back tested result so that you have a full confidence about this strategy. So first, let's see what is the criteria to apply this strategy in an uptrending market. So first criteria that you need to look for is trend, which way the market is trending. Now, if you see a market in a sideway, then also you need to look for the overall direction of the trend. This is the first criteria. So let's assume that we have found a market that is uptrending. So this is an uptrending market, and then we will be looking for an important level of support and resistance. So what we will be looking for, a level which in the past acted as a resistance, okay, and also acted as a support, both. Again, I'm repeating, we need to look for a level which in the past acted as a resistance as well as acted as a support, both. That is we call a mirror level. Okay, so that is what we will be looking for first. If we find that kind of support and resistance, the same level acted in one place as a resistance, at least in another place as a support or more, then we will consider this is a valid level to apply our strategy. So two criteria, one is trend, another one is support and resistance. Let's say we have found an uptrending market, we have found a level which acted as a resistance, as a support. After these two criteria, the next thing is we have to look for a bullish engulfer in this important level. Now what is the criteria for this bullish engulfer? Say this green candle you see, this is a bullish engulfer. Now this bullish engulfer must be crossing the previous candle's low. This is very, very important. Say if this candle started somewhere from here, we will not consider this is as a bullish engulfer. It must cross the previous candle's low. So let me draw this level here. So this is the previous candle's low, right? It crossed the low and it must cross the high and close above. So this is very, very important. Must cross the previous candle's close, okay, and also previous candle's high. Then we will consider this is a valid bullish engulfer. You got it? Uptrend, support, resistance at the same time, same level, then a bullish engulfer. So when you see these three things aligned together, we can say that we have found a trade signal. Very straightforward and simple. So when you found this trade signal, the next thing you will do, take your Fibonacci tool. Okay, so this is the Fibonacci retracement. Take it, place it at the starting of the bullish engulfer and end it at the end of the bullish engulfer. So take the Fibonacci default Fibonacci tool. Okay, so when you place this Fibonacci tool, okay, you found the level. So this is the 38.2%. So place a line at 30%. Say this is the 30% of this Fibonacci level. Assume that a bit above this 38.2 Fibonacci level. Now this is where, this is the line of this 30% retracement of this bullish engulfer, and in this zone we will place a pending order, buy order from here, keeping your stop loss below the bullish engulfer, and you will be targeting 1 to 1.0 something. So 1 to 1, just 0.023 for your commission or spread. So basically 1 to 1. This is for the uptrend. I'm repeating again, then we'll go back to the downtrending market. So let me repeat again everything so that you understand. First thing, you will find a trend. So let's assume that you found an uptrend. Then you look for a level which in the past acted as a resistance and also same level acted as a support. So you found a level that has acted as a resistance, as a support. Next thing, you will be waiting for a bullish engulfer. The bullish engulfer has to be on that level of support and resistance with crossing the previous candle completely at the bottom and completely at the top. A healthy bullish engulfer, textbook bullish engulfer. When you found this bullish engulfer, you found a signal. That is, you found a signal to take a trade. And how you will take the trade? By placing a pending order. To do that, you need to take your Fibonacci tool, starting of the bullish engulfer to the end of the bullish engulfer, and then you will place your pending order around 30% Fibonacci level. So the level you see here is 38.2%. So let's a bit above this 38.2%, which is 30%. So this is where you will be placing your buy limit, keeping stop loss below this low. okay, below the bullish engulfer, and your take profit will be 1 to 1. So this for the uptrending market. Now let's see the same criteria for a downtrending market. Okay, so this is the situation with a downtrending market. So when the trend is down, what we will be looking for, the same criteria, we will be looking for a level that in the past acted as a support and also acted as a resistance. So when you found a level like this, the next thing in the downtrending market, you will be waiting for a bearish engulfer. So this is the bearish engulfer. What is a bearish engulfer? Is what the candle has crossed the previous candle's high completely, and then the engulf the previous candle's low completely. That is what we call a bearish engulfer. So when you found the bearish engulfer, what the next thing you will do? Take your Fibonacci, place it at the starting of the move, always from the starting to the end. So you place the Fibonacci level. Now you found 38.2 Fibonacci level. That means the 38.2 retracement. Place a line at around 30%. So below a little bit is what is 30% Fibonacci level. Now delete the Fibonacci and then place your sell limit at short. So here sell limit, keep your stop loss above the bearish engulfer, and your target will be 1 to 1. So this is the simple day trading strategy. Only understanding this, grabbing this information, and then keeping yourself on the track, backtesting if you can, then trading the market with proper risk management and discipline, you can become a consistently profitable trader. Now let me show you quite a few examples on the chart that will give you the real confidence about this strategy. Let's start. Okay guys, so let's start with this example. This is British pound US dollar 5 minutes chart. Let's start with this example. I will show you quite a few examples so that you have full confidence. Now I have replayed this chart so that it becomes easier for you to see the trade properly. So first of all, what the trend direction in this part of the chart, what you see that this is in the 5 minute chart. For this part, we see a deceleration to the downside. So the trend is down. We have found a downtrending market. You can see the considering from here, the price slowly decelerating to the downside. So this is a downtrending market. So when you found a downtrending market, the next thing you need to find is a bearish engulfer on a level which has acted in the past as a support and resistance both. Now what you see, the last candle in this chart, this is 5 minute chart, and this is a perfect example of a bearish engulfer. Now where this bearish engulfer is formed, let's draw this level on this bearish engulfer. What you saw that this is what exactly we are looking for. What you saw that, look at the past, this is a support here, is a strong support, and strongly rejected this price to the upside, went well above, the price came down here and then broke this level. This support now acted as a resistance multiple times. This support tested as a resistance, and we see every time the price is bouncing from this level of resistance. So support here, resistance here, completely fulfill the criteria of support and resistance. So the next thing, you need to look for a bearish engulfer that has crossed the high of the previous candles and the low of the previous candles completely, and that is what exactly happened. You saw that this green candle, see the price, this bearish engulfer crossed the above and the crossed the below completely. So all the criteria is fulfilled. Now we found a trade signal based on the criteria of our strategy. Then how you will take the trade? take your Fibonacci tool. So this is the Fibonacci tool in trading view. If you don't know how to use Fibonacci, I have a completely video on it. I will put it in link above, and also link will be in the description how to use Fibonacci tool. You can watch that. Now, so what you will do, place it at the starting of the move, okay, and end it at the end of the move. So you found the Fibonacci tool. Now what is the next thing? So this is the level of 38.2% Fibonacci level. So if you wanna take 30% Fibonacci, just place it a little down. Now this line is where 30% Fibonacci, that means the 30% retracement of this move to the downside. Now you will be placing a sell limit in this zone, so just on this line, keeping your stop loss just above the bearish engulfer, and you will be targeting 1 to 1. Now this strategy 91% winning rate, so this is why it has 1 to 1 risk to reward. It is incredibly powerful. Now if you want to increase your risk to reward, let's say 1 to 1.5 or 1 to 1.2, it is completely fine. It works incredibly in any risk to reward ratio. Only your winning rate could be a little bit less, but the profit will be almost the same. So it's up to you how you will be modifying the strategy. But because it is grounded on 91% winning rate, so I keep 1 to 1 risk to reward ratio, as it has been back tested in this way. So let's replay the chart. Now we see that you can hit the profit target just in maybe less than half an hour with 1 to 1. Let's see more examples on this strategy. Okay guys, so let's see this example. You see this red candle broken to the downside. This is the perfect example of a textbook bearish engulfer. Now to apply the strategy, what is the first criteria? Is the direction of the trend. Look at the first of all direction of the trend. It is, you can see clearly that the price broken to the downside, the overall trend direction is down. So this is a down trending market, bearish engulfer. Now since this is a downtrending market, we will be looking for bearish engulfer on a level which in the past acted as a support as well as a resistance. So let's see if we can find a level. So this bearish engulfer, we found the trend. Let's see the level. Now let's draw a line on where this bearish engulfer is started from. So if you draw this line here, extend in the past, see in the past what happened. So you see this level acted here as a resistance, the same level acted as here as a resistance, and also here as a resistance. Here with this doji, we can see that acted as a support, and also here this level acted as a support. So acted as a support, broke here, acted as a resistance, here also resistance. So quite a few multiple time this level acted both as a support as well as a resistance. So this is the second criteria has been fulfilled. Now what you need to look for next is a bearish engulfer, and that is what we found. The criteria for the bearish engulfer is that the candle need to be cross the previous candle's high and need to close just passing the previous candles completely. So we have found the perfect bearish engulfer according to the criteria of our strategy. So what is the next thing is take your Fibonacci tool, place it at the starting of the candle and the end of the candle. Okay, now you need to draw a line at around 30% Fibonacci level. So this is the 38.2%. So place it couple of pips below, which could give you a 30% Fibonacci level. Now this is where we will be placing our short limit, that means the sell limit, just along this line, keeping the stop loss above this high, and we will target 1 to 1. Now this is 1 to 1 target. to keep the winning rate high. This is why you will make money from this strategy. It has a 91% proven backtested. I have backtested 106 trade on this strategy and I found 91% winning rate, so which is incredibly powerful. If you took 1 to 1, now if you want to take more, let's say 1 to 2, 1 to 3, you can take it, but the winning rate will be a bit less, but it's still highly functional strategy because this is grounded on 1 to 1 with 91% winning rate. We will stick to it. The rest you can check, and if you want to modify, you can modify. Ask me question, I will help you. Now let's see. So this is the replay chart. Let me replay the chart and you can see that you are just triggered the trade in maybe next 10 to 15 minutes. You make money from it. Congratulations. Now let's see more examples. All right guys, so let's see this example in same instrument, British pound US dollar, 5 minutes chart. Now the last candle, what you saw, that this is the perfectly textbook bullish engulfer in a very important level of support and resistance. So let's see if we can apply all the criteria of our strategy. First of all, look at the trend. You see this is the clearly visible uptrending market creating a series of higher high and higher low. So you see that from here the price definitely going up with creating a series of higher high and higher low. So this is a clearly defined uptrending market. So trend is up. Now we need to look for a level of support or resistance that acted in the past in both ways. Let's draw this level here. Let me draw it so you can see it clearly. What you saw, that this level here where the bullish engulfer started. So what you saw in the past, look at this one. So this is the where the bullish engulfer started. Now look at the past, acted here as a support, back to back 3 points were touched as a support, and the same level acted here as a support and here as a resistance. So the criteria is that what I told, that you need to see that this same level acted as a resistance and then bounce and then broke and acted as a support and then will go. That is where we will be waiting for a bullish engulfer. Now the same thing happened. This level acted multiple times as a support and then the price came here, acted as a resistance, acted as a resistance here, acted as a resistance. This is a strong level. You see from here there is a big move happen. So this bullish engulfer is formed in this important level of support and resistance. So we found the second criteria, support and resistance. The next thing is the candlestick. So as I told you, we need to wait for a bullish engulfer, and this bullish engulfer need to cross the previous candles completely to the downside and to the upside. So it has done completely and closed well above. So we found the signal candle. What is the next thing is to take your Fibonacci tool, okay, and place it at the start of the move and place it at the end of the move. So you found complete Fibonacci retracement. Now this is the 38.2 Fibonacci. Place a line around at 30%, so which will be a little bit above, and then delete the Fibonacci tool. Now you found the entry point. Take the tool, long order, that means the buy limit here. Your stop loss will be just below the bullish engulfer and your take profit will be 1 to 1. This is a 5-minute chart and it shouldn't take much time for you to hit the profit target. So in just a matter of maybe less than half an hour, your profit target is hit. Let's see more examples. Let's see this strategy, 5 minutes chart, how this strategy works in gold. Now gold you see that this is a highly volatile instrument, highly traded instrument. Let's see how we can apply this strategy in gold in 5 minutes. As you can see, this is a clear downtrending market, no doubt about it. Every time the price is creating series of lower high and moving along this trend line. So we found a market that is in downtrend. Now the next thing, we need to wait for a level, and then we need to wait for a bearish engulfer in a downtrending market. Now what you see, that this was, I was replaying, but what you see, this candle, this is a textbook bearish engulfer. According to the rules of our strategy, you can see that the past of the previous candles, it has crossed completely here. Okay, you see that the candle crossed the previous candle's high completely, engulfed, and it has crossed the previous candle's low completely and closed the previous candle's closed as well below. So this is a perfectly textbook bearish engulfer. Now let's draw a level where the bearish engulfer is formed to see where it has been formed. Now this level, you see that this is a resistance, this is a resistance, and in the past we see there has been a lot of consolidation, and this in the past this level acted strongly in quite a few area as a support. So support, resistance. So our condition is fulfilled, as we told that we need a level to be acted as a support, broke here, and then acted as a resistance, and then bearish engulfer. So we have got all the criteria, rules is fulfilled. The next thing is take your, so you got the signal. Next thing is take your Fibonacci tool, place it at the starting of the move to the end of the move, okay, and then draw a line at 30% Fibonacci level. So this is the 38.2 Fibonacci. Make it a bit lower. This is the 30% Fibonacci level. You found this is the 30%. Now place your pending order, short sell limit here. Keep your stop loss above the bearish engulfer, and your target will be 1 to 1. If you want to extend, you can extend your profit target based on your psychology. So let's see, you got covered in just 1 minute, and you have got another one. You see, this is a big bearish engulfer. This is another trade also in this level of support and resistance. Cross the previous candle completely, cross the previous candles low, and that is the power of this day trading strategy. Now you have, let me show you quite a few trades that is available in this chart. So you see that this is gold. Now you see there is another trade here in the same level. You see this is also a completely bearish engulfer, satisfy all the criteria of the rules of our strategy, and quite a few trade you can find in the same chart. So this, there is a trade here, there is a trade here, there is a trade here, okay. So you can find hundreds of trade across the chart. The only thing you need to know is how to apply the strategy, stay disciplined, learn the risk management. As I told you, if you don't know, watch the video and also watch this one over and over again to reprogram your mind to learn the strategy to become an independent, profitable trader. I have given you the tools. Now it's your part to play the game. Now let me show you the back tested result. So this is the around 106 trade I have back tested across quite a few instrument: GBP USD, AUD USD, Euro Dollar, Gold, USD CAD, USD CHF, GBP JPY. Around 97 trade winner, 9 trades was loser out of 106 trade, which turned into 91% winning rate. I sincerely believe that this valuable video is helpful to you. Don't forget to subscribe. Thank you for watching. See you soon with another wizardry. Much love. See you soon.